Welcome to XP Power. It is results time, interim results. I'm joined by Duncan Penny, Chief Executive, and Jonathan Rhodes, the money man, the Financial Director. First of all, we'll talk about Brexit and we'll talk about the last results in a moment. But first of all, the last 6 months, what's it brought for XP Power?
We've had a very good first half to 2016. Record orders, record revenue, obviously helped by the acquisition of MCO last year. Obviously helped by the strengthening US dollar, which is up 5% on the same period a year ago. But we've seen growth right across the world. Asia grew particularly strongly, 29%, some new programs there, albeit off a very small base. Even Europe was up 6% in quite challenging market conditions, and the US is up 14%. The US probably saw most benefit from the MCO acquisition and obviously the strengthening US dollar. So we're pretty pleased with what we've achieved in the first half.
Jonathan, what's that meant to the bottom line and the balance sheet?
Orders up 9% versus this time last year to £61.6 million, and revenue up 12% to £60.3 million, both records, and obviously helped by the strong dollar and the MCO acquisition. Gross margins held firm as well, just below 49%, and although our OPEX went up a bit because of some of the things we did last year in terms of sales and R&D spend, and we're getting the full year effect of that this year, we have managed to grow earnings by 3 to 4%.
Okay, let's cover off that Brexit thing, but also let's put it against the backdrop of the different continents that you operate in. Brexit, for those of you outside the UK, very much about Britain leaving the EU. The vote just went for it. What's been the effect on that? And then just pan me out more geographically.
Well, if I can talk about the commercial aspects of it, I'll let Jonathan talk about the effect on the numbers. It's quite difficult to call how it's going to work. The benefit to those customers in the UK is that obviously they're working off a much lower sterling rate, so they're going to be more competitive. So it may benefit some of our customers. Half of those customers we actually invoice in sterling today, so we're in the position now where we've got to put the prices up, and we're in fact doing that to protect our margins. So that's what we're doing right now commercially to protect our margins. But perhaps I can let Jonathan talk about the translation effects and other effects of Brexit.
Yes, there are sort of three strands from Brexit that I see. The first one is if there's a downturn in the UK as a result of Brexit, we're not immune to that. The second one's already happened as well. We've had a much weaker sterling in the last couple of weeks. And that does affect us a bit. We do sell to some customers in sterling, not very many I might add, because even some of our UK customers are billed in dollars. So that hurts us a bit because all of our costs are in dollars and we're selling to them in sterling, so it squeezes our margin. But as Duncan mentioned, we will try and put up the price to customers. But then on the translation, because we're a dollar company and we're denominated in dollars, when we convert that to sterling, we get the benefit of that on the top line, also on the cost, but it does help us a bit on the operating margins as well. And the third strand I alluded to at the beginning is how we're structurally set up, and this is more how the future of Brexit plays out. We ship from the Far East into the UK and into Europe. We've got subsidiaries here and we've got subsidiaries in Europe. So I think no matter what happens in terms of new controls between UK and Europe, we're well set up and we can adapt because of the way we're situated and the way we ship in from the Far East.
Duncan, in very simple terms, passing on stuff to customers, is that going to affect customer relations? Is it going to affect your competitiveness, say, compared to other companies that aren't affected by Brexit?
I don't believe so. Obviously, there's a few niche manufacturers in the UK which will be beneficiaries, I think, but most of the product in our industry is manufactured in Asia, and the components are almost exclusively bought in US dollars. So I think vis-a-vis the competition, I think it's the same for everybody. I don't think we're in a worse position or a better position than our competitors in that regard. And you're right, customers don't like having the prices raised, and we wouldn't like having prices raised, but I think they will understand it when you see how much sterling has weakened versus the US dollar.
Well, let's look outside the UK. Let's look towards Asia, China and Vietnam. We dealt with that in our last results, but how is that progressing at the moment?
Well, we're continuing to expand our manufacturing in Vietnam. It's going very well. We manufactured, I think, 550,000 units, power supplies in our factories in China and Vietnam, and 25% of those are now manufactured in Vietnam, 140,000. There's an obvious labour advantage in Vietnam with the labour costs being lower than China. But Vietnam's progressing nicely.
Duncan mentioned MCO then in North America. You made the acquisition, you've been integrating, perhaps a bit more from you on that in a moment, Duncan, but from a financial perspective, you were saying you were going to start the process of paying down on MCO. How's that going?
We did borrow $12 million last year to acquire MCO, and we've just started paying that down with the first instalment this June. So we've paid $1.7 million back. And we're going to carry on paying that on a quarterly basis at that level. So by December 2017, we should have fully paid off that borrowing for MCO.
All right, always brings a smile to the face of the FD. What about the chief executive perspective on MCO? Integration, always very important when you have a merger. I know from news bulletins that we've done with you, you're doing quite a lot of integration, training, and quite a lot going on there.
Well, as you say, we've trained all our salespeople on the products. The sales side of MCO is completely integrated. All the MCO sales are going through our sales channels, through our sales guys now. The order intake was really good for MCO. We had orders of $5.8 million. To put that in context, that's in half a year. Last year, MCO revenues were 8.5 million, so it looks like there's some decent growth there. So the early signs for MCO really, really encouraging.
Jonathan, I'm not expecting you to name names or give us too many suggestions, but is the purse ready for more acquisitions anywhere in the world?
Absolutely. We've got a very strong balance sheet. The cash flow generation is still very, very good. And as we've mentioned before, we've got a pipeline of acquisitions that we are assessing on a regular basis. We are talking to people, but we're not going to rush into anything. We're only going to do something that fits us, that expands our product portfolio, and that we see as accretive to earnings. So we are still looking, and hopefully it's a question, we've been saying this for a long time, but hopefully it's a question of watch this space, and there'll be some more in the future.
We've talked in the past about green products, and we've been looking at some new products in your company, NanoFlex being one of them. And there people have talked about the need for reduced sound, reduced heat. It's something you're always looking for, but where are we on the green products front?
Remarkable growth again. We were up 29% on green product revenue. It now represents 24% of our overall revenue. So we did over 14 million pounds in the first half. So I think the story with green, it's not necessarily because they're green that they're being well received by customers. It's the reliability aspects of these products. Because they run cooler, they're inherently more reliable, and that's why customers like the products. You can do away with the fan. You talked about sound and noise. If you do away with the fan with the green product, that's another advantage of it. So lots of compelling reasons why customers are buying green products, and they seem to be going from strength to strength. Okay, let's pull it all together with a conclusion from the financial perspective on acquisitions, paying for acquisitions, the dollar, the sterling, the world situation. What's the message out there as your concluding remarks?
An encouraging first half. The dollar's helped us, and if that continues, that'll continue into the second half, and we should carry on producing better revenues. Overall, very pleased with the shape of the business. We're carrying on generating cash, we're paying good dividends, and so it's more of the same and potential acquisitions.
Duncan, from you, and perhaps in chief executive's role, you can perhaps project a little bit beyond the next 6 months, but give me 6 months and your conclusions and look ahead.
Well, again, record orders, record revenues, really pleased with that. Growth across all 3 geographies, pleased with that. Good impact from MCO and good positive signs there. Had some interesting product releases as well in the period. So all the signs are really quite good for the medium-term growth. There could be some short-term economic uncertainty for Brexit, but I think we'll ride through that and deal with it as it happens. So we remain very encouraged about the future.
Okay, Duncan Penny, Chief Executive, and Jonathan Rhodes, Financial Director here at XP Power. Thank you very much for putting us in the financial and also the company picture. Thank you.
Thanks, Nick.